Last week, we learned that after 3 years of merger discussions, Bitfarms entered into an agreement to acquire competitor Stronghold Digital Mining. Bitfarms says the merger will cost around $125 million in stock and around another $50 million of debt. The deal is expected to close in Q1 of next year after approval from regulators. What was behind the decision to join forces with Stronghold Digital? I'm sure strengthening your US footprint played into the move, but did the Bitcoin halving back in April have anything to do with it?
Yeah, so there's a lot of things that came into play here. Definitely strengthening our U.S. exposure is a big part. We're a very international Bitcoin miner. We've got over 12 sites in 4 different countries and 3 languages. But really, U.S. has been the smallest part of our portfolio. So with this one transaction, we're able to increase the size of our portfolio next year by almost 50%. We're able to rebalance our energy portfolio towards the United States. So next year, we're going to have about 65% in North America and almost half of that in the US. And we're able to get a huge growth pipeline, both in the short term as well as organic growth opportunities over the next couple of years to continue expanding in the United States. So, one transaction really ticked a lot of boxes and opportunities for us.
It sounds like it. And did the Bitcoin halving back in April play a role?
So this is something we've been working on for the last 3 years. The Bitcoin halving certainly has compressed margins for everyone, but for a company like Bitfarms, in order to be successful, we have to be thinking, so many years in advance. So the reality is that for this last halving, we were getting ready for it back in 2020. And if anything, this transaction is more geared around getting ready for the next halving in 2028, because that's how forward thinking you have to be in order to survive in this space.
Now, of course, this deal comes as M&A activity in the Bitcoin mining space remains red hot. There have been other deals recently, including between Core Scientific and AI infrastructure startup CoreWeave, as we've seen the growing trend of Bitcoin miners turning to artificial intelligence to diversify revenue streams, given it became a lot less profitable to mine Bitcoin post-halving. What do you think about this trend? I understand Bitfarms plans to move into the AI space as well. Was your acquisition of Stronghold pursued with the intent of integrating high-performance computing and AI?
Yes, so the high performance computing trend and the AI trend is a very powerful driver right now. What we're looking at is how do we increase the value of our energy portfolio and how do we maximize utility of all of our assets? And certainly we think HPC and AI is a great way for us to continue to expand our presence in the data center space and continue to get the best leverage out of everything that we have. So when we're looking at growth opportunities in the United States, we're looking at what are the opportunities that are not only good for Bitcoin mining, but are also good for HPC and AI. And with the Stronghold transaction, what we've unlocked is the potential for something really groundbreaking. The ability to create a merged HPC, AI, and Bitcoin mining data center, which will enable us to save a lot of money in terms of the CapEx build out for the HPC AI data center, and also drive a lot better economics at the site and actually drive a more environmentally friendly HPC data center by removing the diesel generating components that usually are in an HPC data center for redundancy.
What other steps are you taking to maximize revenue and profit following the halving? What can people expect? Perhaps more acquisitions?
So we've been upgrading all of our miners this year. We announced a big transformative fleet upgrade at the end of last year. So we've ordered just shy of 88,000 miners that are going to be deployed this year. About half of those have already been deployed in existing facilities. The other half is being deployed, throughout the remainder of this year. As we look towards next year, what we're going to be doing is continuing to build on the success that we've had this year, securing more miners to fill out the build out at Stronghold, as well as our recent Sharon, Pennsylvania site, and trying to figure out how we incorporate HPC and AI into our portfolio of energy assets for an end of 2025 or a beginning of 2026 timeline. We think that timeline really aligns well with what we anticipate to be the top of the Bitcoin bull market cycle. And that's the time when we want to have diversification into an alternative revenue stream like HPC and AI.
Now, of course, Bitfarms has been pushing back on attempts to make it the target of an acquisition as well, rejecting a $950 million takeover offer from Riot, which was unsolicited. As of 2 weeks ago, Riot claims to own a nearly 19% stake of Bitfarms. Where does everything stand with Riot right now? What's the latest there? And would you ever be open to a full takeover offer from the firm?
We as a company are always open to any opportunity that's going to maximize value for shareholders. And so when Riot first came to us a couple of months ago, we started a strategic alternatives review process. We set up a special committee at the board, and we looked at all sorts of different opportunities. We ended that strategic alternatives review process a few weeks ago when we basically came to a handshake agreement here with Stronghold in order to facilitate this agreement. Because at that point, the compelling economics of this transaction and the pro forma merged company are so compelling that that's what we decided to move forward with. And the board unanimously decided that was the best way to maximize value for all shareholders. We believe that this deal is really transformative for the company and for all of our shareholders, not only for what this enables for our immediate growth and the combined aspects of this company, but what this unlocks for our growth potential next year and the years to come. This is a pivotal transaction where we've really committed to diversifying beyond Bitcoin mining itself, not in a way that's going to distract from Bitcoin mining, but in a way that's going to make us better Bitcoin miners. And so, in addition to expanding our US portfolio, with this one transaction, we've also been able to diversify into energy generation, get huge access to energy trading in the United States' largest electricity market, PJM, been able to integrate heat recycling, waste mitigation, as well as HPC and AI into our portfolio. So this has been a very transformative transaction, which is going to be great for all shareholders.
Now, last month, you were appointed the new CEO of Bitfarms after previously serving as Chief Mining Officer. What are your plans for Bitfarms in this new role? What's your vision as you're now leading the company?
So the vision here is really to diversify the company beyond Bitcoin mining. Just like I just outlined here, we see a tremendous opportunity in the next 12, 15 months to get the most out of the coming Bitcoin bull run. But we need to be thinking far in advance of the coming few months. We need to be thinking 1, 2, 3 years ahead. And so, internally, I've outlined plans that will take us all the way through the 2028 halving event. And that's what we're focused on now, is not just what's going to be best for Bitfarms in the immediate future, but how do we get positioned for the bull run, the bear market, the subsequent halving event in 2028. And we really think that diversification is a great aspect towards achieving those goals. For us, really, we want to be in control of our energy, because as a company, as a Bitcoin mining company, energy is our primary driver of cost. And if we're not in control of our energy, we're not in control of our costs. If we're not in control of our costs, we're not in control of our future. And so for the company, we really need to be putting greater levels of control in place so that we are in control of that most primary driver for us, which is our energy. So huge growth in our energy portfolio and the diversification elements that will help us survive and thrive in any economic conditions.
Now, expanding on that, you touched on this today. You also mentioned it in a statement last month where you noted that Bitfarms is, in fact, starting to plan and implement strategies for the next halving event in 2028. What are some of those strategies that are being discussed? What can people expect from Bitfarms within the next 4 years ahead of the next halving specifically?
I think you can expect us to really grow our footprint in the United States with a very strategic focus on cost controls. We're not a company that's willing to grow for any cost. We've shown this for the last 7 years of our operations. We're strategic in everything that we do, whether it be our miner purchases, the countries that we operate in, the new energy contracts that we sign up for. We're very, very strategic and deliberate in that process. I think that the market can expect that we are going to be focused on trying to maximize the opportunity that comes in the historic cycles, because we, as a company that's been around for 7 years, this is personally it was my third halving, and we're now working towards my fourth halving event. We understand how these cycles play out every 4 years. And in order to deliver the most value for shareholders, we need to be playing the cycles to the best of their ability. Right now, that's a focus on growing our Bitcoin hash rate as fast as possible and improving efficiencies for that Bitcoin bull run. For 2025 and 2026, it's going to be a focus on diversification and driving down our energy costs. In 2027, we're primarily going to be focusing on rebuilding and expanding our energy infrastructure. And in 2028 and the end of 2027, we're going to be focusing probably on doing another fleet upgrade, just like we announced at the end of 2023 and we're conducting right now in 2024.